Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for this subject, Principles and Practices of Accounting. In this lecture, we will start with Chapter 3, that is Bank Reconciliation Statement, BRS. All the concepts will be covered in the coming series of lecture. So let us begin. This is lecture number 1. Let's see the learning outcomes first. In this chapter, we'll learn about how to design a bank passbook, understand the reason for differences between cash book balance and passbook balance. Passbook balance is also known as bank statements. Bank statements. And try to ascertain the amount of such difference. So we'll try to learn the reasons, that what are the reasons behind the difference between cash book balance and passbook balance. Learn how to resolve such difference in a systematic manner. How to resolve such difference. So first of all, we'll try to understand what is the reason behind the difference. Reason for difference. In cash book balance and passbook balance, and we'll try to resolve the difference in a very systematic manner. Understand the purpose for preparing bank reconciliation statements and its use, that is utility. Reason for preparing BRS. Why there is a need to prepare BRS? Let's see the overview of the chapter. Salient features of BRS. The reconciliation will bring out any errors that may have been committed either in the cash book or in the passbook. Number 1. Any undue delay in the clearance of check will be shown up by the reconciliation. A regular reconciliation discourages the accountant of the bank from embezzlement. So the bank cashier or the bank accountant will not do any mischief with our books of accounts, because they know that this company or this person is doing regular BRS, that is bank reconciliation statement. He try to tally the cash book and passbook on a regular basis, maybe every month. Causes of difference between the bank passbook and cash book, that is the bank statement and bank column of the cash book. Bank statement and bank column of cash book. Timing differences and differences arising due to errors in recording the entries. Let me tell you students, what is timing differences. Timing differences in the sense what? That supposingly you had given a check to somebody. That means what? Check paid. So basically in your book, that is cash book, you had paid a check of 1000. So you will write minus 1000 because you had already paid it. But it will take 3 to 4 days to the bank to clear the check. So in the passbook, what happens? This 1000 will not be deducted. And that is why, because there is a timing difference of 3 days or 4 days. 3 days timing difference. I believe you understood why there is a delay in the payment of check. Why on the same day the check is not cleared from the bank? Because the check goes to clearing house, and from there the instruction to clear is given to the bank, and after the bank checks whether you have proper balance in your bank account or not, and after that the payment has been made to the concerned party. So all these take 2-3 days to happen. Let us begin with the introduction part. Bank are essential institutions in the modern society. With the increase in the volume of trade, commerce and business entities faced difficulties in transacting in cash for each business activity. They discovered that dealing through bank on regular basis would be easier and better and even safer. There, see, if you are operating through a bank, in that case what happened, there can't be any seller or buyer who can deny the payment. There can't be a buyer who can tell you that yes, I had made the payment to you, because if you are dealing through bank and accepting payment through only through bank, in that case if the payment wants to make you the payment, if the person wants to make you the payment, in that case there should be an entry in the bank statement. Let's continue. And finally, large business entities switched over to banking transactions instead of dealing in cash. So dealing in cash used to be a old time thought process. Now persons and businesses prefer to transact into or do business into either card or through bank account. Nowadays, most of the transactions in business are done through the banking system and banking channel. It is a receipt or payment, whatever. So rather it is legally necessary to operate the transactions through bank after a certain limit. A bank accepts from people in general deposits in various forms and lend funds to those who need it. That means give loans. Primary functions of bank: to accept deposit and give loans. Primary functions of bank. It also invests some funds in a profitable investments. Thus, money which would have been otherwise idle is put to use and made available to those who actually needs it. Those who deposit the money are able to withdraw it according to the settled terms and conditions with the bank, apart from receiving deposits from the handling cash transactions on behalf of the customer. The bank also renders some other useful services as indicated below. What are the services given by the bank? Number one, the bank discount promissory note or hundis. That is, it enables a customer to receive the cash before the due date is consideration of a small charge that is called discounting charge. I'll quote an example over here and it would be easier for you to understand. Supposingly, Ram is a seller and he sold goods on credit of 3 months to Mohan. Mohan said, okay, I will make the payment after 3 months. But Ram wants payment urgently. Now Ram approached Mohan and requested that, Mohan, why don't you make payment to me? Now Mohan is not in a condition to make payment because Mohan don't have money or don't have cash. So Ram approaches to a bank and Ram is saying to the bank that, sir, why don't you discount this promissory note? So Ram is having a promissory note. Ram gives promissory note to the bank. That promissory note is of 10,000. Bank takes some discounting charges and make the payment to Ram. Supposingly bank pays 900 to Ram. In that case, the discounting charges is 100. Because Ram wanted money urgently. In that case, bank had given him the money, but bank had also taken a charge at the rate of 10%. So 10%, that is 1000, and bank had given 9000 to Ram, who is a seller. I believe you understood the whole transaction between Ram, Mohan and bank. Let us continue now. Point number 2. The bank allows overdraft facility of its good customer, reputed customer, credit worthy customer, so that they can make payments even when they cleared later. So even when they do not have sufficient bank balance, of course, the overdraft is generally secured and must be cleared later. That means what? That State Bank of India, if a customer is having an overdraft facility of 50,000, so State Bank of India over here, if the credit limited from SBI is credit limit is 50,000, if some person is having 2 lakh rupees in his bank and he wants to withdraw 2,50,000, that is possible. Why? Because he is already having a credit limit of 50,000. So he can withdraw 50,000 more from his bank account. Third, a bank give loan for a year or so to its customers so that they can continue their business operations, and such financial help, financial assistance is of great help for the business. So this is known as short-term loans. Short-term loans given to business by bank. Let us see point number 4. The bank on behalf of customer collects the amount of dividend. The bank on behalf of the customer collects the amount of dividend warrants or interest on securities, and they deposit it directly to their customer's account. So supposingly this is company A, Mr. C has invested in company A, and Mr. C has given instructions to the banker that whenever company A is giving dividend, in that case deposit the dividend directly to my bank account. I believe you understood that Mr. C has given an instruction to the banker that they should directly they should collect the dividend or interest on securities from the company A and credit in his bank account. And Mr. C has also given instruction to company A that they should make payment directly to the bank account. In that case, this is a facility offered by a banker to Mr. C. Over here, Mr. C is the customer of the bank. Let's see point number 5. On instructions of the customer, the bank makes payment of insurance premium, rent on the due date. So what happens, many a time customer is not able to remember all the due dates, that when he need to pay insurance premium, when he need to pay the, you can say, electricity bill, when he need to pay the water bill. So in that case, Mr. A, that is the customer, directly give instructions to the bank for the payment of these bills. What is the benefit to the customer? The benefit to the customer is there won't be any bill which is unpaid. So there would be no late payment charges. The credit worthiness of the customer will continue, and the bank will charge a minimum charges or a minor negligible charge for doing these services. Point number 6. The bank sells and purchases shares, debentures or government securities on behalf of its customers. So many a times it has been seen, if you know, State Bank of India is also running State Bank of India Securities, SBI Securities. So customer can open a demat account using SBI Securities, and he can connect the SBI bank account and the securities account together, and he can make purchase of shares, debentures, government securities, bonds, etc. He can invest into capital market, money market, etc. I believe you understood. Let us see point number 7. Money can be remitted to another place or person through the bank at a low cost. So basically over here it means the bank will help for the money transfer. A bank could help you in money transfers. Point number 8. The bank in return for a consideration furnishes security or guarantee for its customer whose credit is good. Supposingly, you are doing a project, and for doing that, for completion of that project, you need a guarantor. The bank will work as a guarantor for you. The bank will give you guarantee. The bank will take your guarantee in that project. But for this, the guarantor facility, bank will obviously charge some commission. Next point. The bank also issues letter of credit, LOC, and traveler's check to facilitate commerce or travel. So supposingly if you are traveling and if you feel that you can't handle so much of cash, in that case what you can do is you can give hard cash to the bank. The banker will give you a traveler's check. You can take that check and travel wherever you want, and supposingly you can just do one thing, that you can show that traveler's check to the same bank. The branch would be different, and from there, from that branch, you can take your cash back. The bank will charge nominal amount for making traveler's check, that is the bank's commission or the bank charges. This bank is in India and this bank in USA. So this traveler's check will work. I believe you understood the functions of bank. We have discussed the functions of bank in detail. Let us continue now. Bank passbook, which is also known as bank statement. Bank statement. Bank passbook is merely a copy of consumer's account in the book of the bank. The bank either sends periodical monthly statements of account or gives a passbook to the customer in which all deposits and withdrawal made by the customer during a particular period of time is recorded. Both represent almost a copy of ledger account of the customer in the books of the bank. Thus, we can say that it is the bank's way of keeping a customer informed of the entries made in his account. It is customer's duty to check the entries and immediately inform the bank if there is any error in the entry that has been made by the bank. These days, with customers can easily access the bank statement through online mode, through banking apps in mobile phone, or net banking could be used in mobile or computer. These days, the customer can easily access the bank account online at any point of time through net banking, and they can check their passbook. They can check their passbook. They can even collect a copy of their passbook online or copy of bank statement online. They can even download that. Let us continue. Messrs ABC in account with Punjab National Bank, Daryaganj, New Delhi. This is the pin code, date, particulars, check number, withdrawal, deposit, and bank either debit or credit balance. This is bank statement. Sample of bank statement. Passbook sample. The bank statement of account can also be similar form except that it is a loose sheets. Bank statement is loose sheets and passbook is like a book. The bank itself sends the statement to customer, but if the customer wants to maintain a passbook, then it is their duty to send the passbook to the bank periodically so that it is updated by the bank. So these days, many bank ATMs have automatic teller machines where the automatic passbook printing is happening, and the customer don't need to uh, go to the bank, visit the bank, be in a long queue for just printing of the passbook. So these days, all these things are not happening. The passbook can directly be printed through the ATM. State Bank of India is having a lot of ATMs, that is automated teller machines, in which the passbook printing is happening. Other banks are also having that facility. There is no problem. Business houses should also obtain at the end of the year a certificate from the bank duly stamped and signed showing the balance which the firm carries with the bank as of that date. The bank balance shown in the passbook is known as passbook balance for reconciliation purpose. The credit balance as per passbook at a particular point of time is the deposit made by customer, while debit balance as per passbook is an overdraft balance of the customer. So we can say that credit balance in the bank passbook means positive balance, and debit balance debit balance in the bank passbook means negative balance, that is the overdraft balance. Overdraft balance. I hope you are clear. Let us continue. Students may not hear that the nature of balance shown by the passbook in the books of bank and cash book in the books of customer is quite different. The debit balance in the passbook represent the credit balance in the cash book. That means what? In the and vice versa. Because the business enterprise treats the bank as a debtor and trade receivable, and bank treats the business enterprise as a creditor or trade payable. So we can say that debit balance debit balance means positive balance in cash book, and credit balance is the negative balance, means negative balance in the cash book. So over here we have shown passbook and over here we have shown cash book. Let's continue. Let's continue. Bank reconciliation statement. To reconcile means what? To identify or to identify or out of the difference between the two different sources and combining that difference. That means what? That to identify the reasons that why these two differences in the cash book and in the passbook has taken place. And after that, we'll try to rectify the differences. Whatever we deposit or withdraw money from bank, it is always recorded at two places. First, bank column of cash book, that is for the customer's book, bank column of cash book. Number two, bank statement, that is the passbook. It is the bank's book. So bank will record in bank statement and customer will record in cash book. That is bank column of cash book. The cash book is maintained by the person having the bank account, whereas the bank statement is prepared by the banker, that is the bank. Therefore, we can say that the balance in both should be equal and opposite in nature. One debit, another credit, one credit, another debit. For example, if Mr. A has deposited 1 lakh rupee in his bank account, it will be recorded in the debit side of his cash book. But for the bank, it is a receipt and bank will treat Mr. A as creditor, that is trade payable, and that is why they will give a credit entry in the bank statement or the passbook. It is absolutely clear. Mr. A will treat bank as debtor. Mr. A will treat bank as debtor, and that is why they will debit the balance, and over here the bank will treat Mr. A as creditor or trade payables, and that is why they will credit this amount. But most of the times these two balances do not match because of several mistakes, because of some reasons. The reason for differences in the balance can be many and are explained later in this chapter. We'll continue, we'll see that what are the reasons. It is possible to eliminate the differences by matching all the facts and figures of the two statements. The process of eliminating the difference and bringing the two statements in line with each other is known as reconciliation, and the statement which reconciles the bank balance and cash balance, that is the cash book, and the passbook is known as BRS, that is the bank reconciliation statement. I believe all of you understood the meaning of bank reconciliation statement. Let's continue from here. Importance of bank reconciliation statement. Importance of bank reconciliation statement. Bank reconciliation statement is very significant, very important tool for internal control of the cash flows. It helps in detecting errors, detecting frauds, irregularities in the business, if any, at the time of passing entries in the cash book as well as in the passbook. We can say that whether intentionally or unintentionally. Since frauds can be detected on the preparation of BRS, therefore accountants are very careful while preparing and maintaining the records of the business enterprise. Hence, it works as an important tool or important mechanism of internal control in the business. Following are the salient features of the BRS. Let us see. The first salient feature is the reconciliation will bring out any errors that may have been committed either in the cash book or in the passbook. Errors that may have committed either in the cash book or in the passbook. Any undue delay in the clearance of check will shown by the reconciliation. What happens? Supposingly there is 1 day or 2 day takes place for clearing the check, but supposingly there is a check which is not cleared for 15-20 days. In that case, the accountant will come to know that there is some issues with the bank, but when he will come to know, when he will try to reconcile the cash book with the bank book, that is cash book with the passbook. Third, a regular reconciliation discourages the accountant of a bank from embezzlement of funds, because he knows that the businessman is going to reconcile his books of accounts on a regular basis, and that is why his embezzlement will come into picture and he will be caught. So there have been many cases where the cashier merely made entries in the cash book but never deposited the cash in the bank only. They will be able to get away with it only because of lack of reconciliation. If the reconciliation is happening on a regular basis, the cashier will also not try to do such kind of embezzlement, and it will be beneficial for the company. Fourth, it helps in finding out the actual and true position of the bank balance by incorporating the effects of uncleared funds as well. Uncleared funds as well. So if there is uncleared fund, or if there is something which is some amount which is pending to be credited in the bank, we will get an actual and true picture of the bank balance. We'll get updated bank balance regularly. Updated bank balance figures regularly. I believe you understood this. Let us continue and see what are the main causes of difference between the bank passbook, that is bank statement, and the client's cash book, that is the customer's cash book. The difference in both the balances, that is the bank balance as per cash book and the passbook balance, that is the bank statement, may arise because of the following reason. What are the reasons? Number one, the difference is because of the timing. So it is known as timing difference. We had seen in the chapter overview timing difference. Sometimes a transaction is recorded in two different times in the cash book and passbook. This may happen because of the following cases. Mr. A has issued a check to PQR Limited. Mr. A wants to pay to PQR Limited. Now it will be recorded in his cash book immediately. So what Mr. A must have deducted from the cash book, but the bank will recognize this transaction only when the same check will be presented to it by PQR. Supposingly 3 days time taken, and in between these 3 days the BRS has been prepared. In that case, what will happen? In the BRS, there will be a difference of the particular amount, say for example 10,000 in the cash book as well as in the bank statement, that is the passbook. Let us see over here. Similarly, for PQR Limited, entry in the cash book will be made immediately as the check is received from Mr. A, but in the bank account what happened will be credited within 2-3 days. So there would be a issue, and the BRS is prepared to reconcile the cash book as well as the passbook. So when they will prepare, when PQR Limited will also prepare the bank reconciliation statement, they will try to understand that this delay is happened because the clearing of the check will take place 3 days to happen. Let's see point number 2 now. The customer, for example, interest received on savings bank account, it will be credited by the bank immediately, but entry in the cash book will be made only when the customer comes to know about it. That means what? When the customer will check the bank statement, at that point of time only he'll be able to understand that okay, fine, I had got some kind of interest from the bank. So he will never record that. So before checking the bank statement, the customer will not record the bank interest given by the bank to the customer, and that won't be recorded in the cash book. So but whenever the customer will check the bank statement, after that he will come to know, okay, fine, I had got some kind of bank interest, and he will record in the cash book. So earlier what happened? There is no entry in the cash book, but in passbook there is a bank interest entry that is plus 1000. So we also need to change the cash book according to the passbook difference. I believe you understood. On a similar manner, it may happen that many a times the banker will also charge bank charges. That supposingly you lost your debit card or credit card, you requested in online mode, you requested the bank that to issue a new debit or a credit card. In that case, the banker must have issued a debit or credit card to you, but supposingly the bank has charged you 800 rupees for that. The banker will not come to your place or go to your company and ask an 800 rupees cash or check. The banker will deduct this amount from your bank account and they will not inform you at all, because they will put entry in the passbook. So whenever you will take a printout of the passbook or a bank statement, you will come to know that this 8,000 rupees the bank has taken from you as a bank charges for issuance of new debit or a credit card. I believe you understood, and that is why there would be a difference. I'll quote an example over here. In the passbook, the banker will deduct 800 rupees, and in the cash book there would be no entry. So we need to rectify this. We need to rectify this. This is not an error, but this is just a kind of time difference, you can say, because we don't understand, we don't come to know that there is a difference, and that is why whenever we come to know, we seen the bank balance, we seen the bank statement or a passbook, and at that point of time we had made the entry. Let's see point number 3. Point number 3 is errors. That means what? Mistakes or errors may be in preparing the accounts either by the bank or customer can also result in disagreement of the two statements. For example, a reason of rectification of error is required to be done in both the statements before preparing the BRS. It may happen that there is an error made by the customer's accountant, or there may be an error made by the banker's accountant in the bank passbook. So whenever we'll try to reconcile the cash book and the passbook, we will make the adjusting entries and will rectify the errors that has been made in the cash book, or will try to rectify the error that has been made in the passbook. I believe you understood this. Errors made by the customer's accountant in customers bank column of cash book will be rectified while preparing bank reconciliation statement. While preparing bank reconciliation statement. That is BRS. On the same way, we can say that errors made by bank's accountant in bank passbook oblique bank statement will be rectified while preparing while preparing bank reconciliation statement by the customer, because customer will inform the bank about the difference, because customer will inform the bank, customer will inform the bank about this difference, about this error, and they will try to rectify that. Okay? I believe you must have understood till here. Let us continue. Some of the items that frequently cause a difference. Some of the items that frequently cause a difference in the customer's cash book and bank's passbook. The first item is check issued but not presented for payment. Check issued but not presented for payment. The entry in the cash book is made immediately on issue of check, but naturally entry will be made in the bank only when the check is presented for payment in the bank. Thus, there will be a gap of some days, say for example 3 days, between the entry in the cash book and entry in the passbook. I'll quote an example and after that we'll see this example over here. Supposingly, Mr. A has issued the check. Mr. A has issued the check to Mr. B. In that case, what happens that in the books of A, Mr. A will deduct 1000 rupees from the cash book, but in the passbook there would be no entry, and that is why this would be the reason for the difference in the bank column of the cash book and passbook, that is the bank statement, and rectification is required, adjustments is required. Let's see the example now. The balance as per cash book and passbook is 10,000. Check of rupees 2,000 is issued but not presented for payment. Then the balance as per cash book and passbook will be as follows. This is cash book, bank column only. The opening balance of cash book is 10,000 rupees. We had issued a check in the name of the vendor, 2,000 rupees, and as per our balance we have a closing entry of 8,000. That is the closing balance in the bank column of the cash book is 8,000 rupees. Let us see the passbook, that is the bank statement. In that case, this is a format of bank statement. See, this 2,000 rupees, the customer haven't gone to the bank and not visited the bank, not presented for payment. Not presented for payment. In that case, as per the bank, the balance will be 10,000 only, because 2,000 won't be deducted from here. On the issue of aforesaid check, the account in cash book is credited by 2,000 and so balance is reduced to 8,000. Whereas the balance in the passbook remained 10,000 until the check is presented for payment. How you will solve the question? So supposingly what we need to do over here in this chapter is, there is a logic, do what other has done. Do what other has done. Do what other has done. This means what? That supposingly in the question we have given balance as per passbook. We had given balance as per passbook. That means what? That we need to make changes in the passbook. Balance as per passbook is 10,000. Do what other has done. Other in the sense what? Cash book. Other in the sense over here means cash book. The cash book balance is 8,000 and our balance is 10,000. What we will do, that is what passbook we will do, we will deduct 2,000 and we will make the balance as 10,000, and this would be balance as per cash book. I believe you understood. And we will write over here check issued but not presented for payment. check issued but not presented for payment. Check issued but not presented for payment. I believe you understood. Take one more example and try to see. Supposingly, in the question, the balance as per cash book is given. Balance as per cash book is given. That means what? The balance as per cash book is 8,000. Now we need to reach to balance as per passbook. What is the balance in the passbook? The balance in the passbook is 10,000. That means what? We need to add 2,000 rupees over here and will reach to the balance as per passbook, that is 10,000. What we will write over here? Add check issued but not presented for payment. Check issued but not presented for payment. And we reach to balance as per passbook. I believe you understood point number 1. Let us continue. We have seen this check issued but not presented for payment. Let us continue and see the another reason. Check deposited within the bank but not cleared. It happens that if you deposit the check in the bank, it will go to the clearing house. It will take 3 days to clear. That means what? Whenever we deposited the check into the bank, we had made entry into the bank column of the cash book and we must have added it. But the banker will add after the check is cleared from the clearing house. It will take 3 days to do that. This is the timing difference. So, and in between, if we had prepared the BRS, we need to adjust through the either the cash book or the passbook, obviously. So just see it over here. As soon as checks are sent to the bank, that is deposited with the bank, entries are made on the debit side of the bank column of cash book. But usually banks credit the customer's account only when they will receive the payment from the bank concerned. In other words, when the check have been cleared from the bank, in between the clearing houses there, again there will be some time gap between the depositing the check and credit given by the bank. Say for example 3 days. For example 3 days time gap is there. Just see the example over here. See the example. The balance as per cash book and the balance as per passbook. The balance as per cash book is 12,000. The balance as per cash book is 12,000 rupees and the passbook is the balance as per cash book and passbook is 12,000. A check of 3,000 is deposited but not cleared. A check of 3,000 is deposited but not cleared. So we will make entry in this. Just see the cash book. In the cash book, we have taken the check because we have deposited the check. So we have taken the entry of the check in the cash book. So the balance is 12,000. We have received the check from the debtor. Received or receipt from the debtor, that is the vendor, 3,000. So our closing balance is 15,000. This is the bank column of the cash book. Bank column of cash book is 15,000. But whenever we'll see the bank statement, we'll check the bank statement, we'll understand that this 3,000 is not credited over here and the bank, as per the bank statement or as per the passbook, the balance is only 12,000 in the bank. Now why this difference is there? So when check is deposited into bank, the bank account in cash book is increased to 15,000. That is the bank column of the cash book is increased. Bank column of cash book is increased to 15,000. But the balance in the passbook remains 12,000 only. Why? Until the check is cleared. So maybe after 3-4 days when the check will be cleared by the banker, concerned banker, the bank also make this balance to revise this balance to 15,000. We need to understand one thing over here, that if we are solving this sum as balance as per passbook, if it's in the question balance as per passbook is given, the passbook balance is 12,000. In that case, what is the cash book balance? 15,000. So we need to add 3,000 over here and we will make the balance it as 15,000. And for 3,000 that we have added, we will write check deposited but not cleared. Add check deposited but not cleared. And at last, we'll reach to where? Balance as per cash book. 15,000. I believe you understood. Vice versa, suppose balance as per cash book is given. Balance as per cash book is given 15,000. Do what other has done. So we need to see the passbook. What is the balance in the passbook? 12,000. So what is the balance in the passbook? 12,000. Balance as per passbook. We need to match this 15,000 to 12,000. So we will deduct 3,000. 15 minus 3 is 12. And we will write over here minus check deposited but not cleared. Check deposited but not cleared. I hope you understood till here. I hope you understood till here. So what we have done in today's class, just take a quick recap and then we'll end up the class. We have seen the learning objective. We have taken an overview of the chapter. Introduction we have done. We have seen the features of bank. We have seen the basically what is the work done by bank or the services provided by the bank to their customers. We have analyzed the passbook, the bank passbook in detail, and then we have shifted to the point that is BRS, bank reconciliation statement. We have seen why there is a difference between the bank passbook and the customer's bank column of cash book. We have seen the importance of BRS, causes of difference, we'll try to rectify it, the timing difference, the error difference, and some of the frequently cause of difference. The first difference was check issued but not presented for payment, and the second difference was check deposited within the bank but not cleared by the bank. I believe you understood till here. Students, so we'll wrap up today's class. Thank you.